Welcome back to the show. Let's talk to Richard Hunt. He's the head of research at Wilson King. Richard, good afternoon.
Hi, mate.
Headlines in City AM today. Davis puts his cards on the table. Yet another reference to Brexit. You worked in the markets for 30 years or so. Obviously, markets don't like uncertainty. They can't factor in uncertain outcomes. How serious is this? Or do you think the fact that the Prime Minister's away, coming back on Thursday, 4-week break, do you think she'll be refreshed and recharged and sort of have the ability, if you like, to basically get the country together and sort of push forward with a strategy that the majority will accept?
Well, she needs to be, because in terms of the government at the moment, it's pretty much front and centre because of the implications it's going to have on the UK as we move forward and everything economic. On the plus side, there does seem to have been something of a coming together of minds within the government, so we've now got some sort of consensus. Certainly the Chancellor seems to have been doing a lot of work behind the scenes to head more towards a soft Brexit rather than the hard Brexit that was initially being talked about. There are a number of timing issues that are clearly at odds between the UK and the EU at the moment. The UK is making the point that any so-called divorce bill needs to be paid after they know exactly what the ramifications of Brexit are. The EU, of course, want it the other way round, so you've got an immediate sticking point. And in terms of that particular article in City AM, it's obviously around David Davis asking for this frictionless trade. In other words, we hardly notice Brexit when it comes. There's some sort of transitional period. But this morning, since that article was published, the EU has already come back and basically said that frictionless trade is a no-go. You know, by the letter of the law, you're now outside of the EU, so it can't happen. It's a very, very complex subject. 2 years is going to fly past. There's going to have to be some kind of transitional period because of that complexity. And unfortunately, until such time as we start to get some real meat on the bones, it's difficult for the market to price anything in.
Right. And best case scenario, will the markets take this in its stride, do you think, over the foreseeable future?
Well, again, some of what's been talked about so far relates to the manufacturing side of the argument. But of course, in terms of the UK, we're just as reliant on services, which don't fall in the normal sort of economic data. So I think, as we probably saw after the vote of the referendum, it's going to be more sector specific as and when it unfolds, that we start to get some idea of what the ramifications actually are, such as, you know, we saw some initial housing in the weakness in the housing sector, for example, after the vote. So again, there's going to be an extra cost potentially for financials, banks in particular, if they need to move their hubs to somewhere in Europe. But until such time as I say, we've got any real meaningful detail, it's difficult to price it in.
Richard, thank you very much indeed.